I'm Grace Joseph, and you're onto the Gracia Memoir session. It's a false breakout. That's to say the market is not ready to change for the better anytime soon. Get this quick. Whenever the bulls push price higher but fail to hold these high levels, they end up paying dearly for it with a drastic fall in prices. Now let me put you up to speed if you had missed out on recent events in the crypto space. In the last week of February, Bitcoin presented a good buying opportunity after its retested lows showed great defiance. By early March, price had breached the channel's resistance and even the 45k level. It became a holding game for those who had seized the opportunity to buy BTC and alt in late February. The goal was to milk every last drop of profit they can get from future advances, considering how long that bottom took to form. But this was not the case since Bitcoin rejected higher prices after making a 28% surge from its lows. I'm Grace Joseph, and this is the Gracia Memoir session. It's true, not all traders spot the same chart pattern, candlestick, and trend line, but when each of these traders note one or more of these, they are more likely to draw the same conclusion. What this does is to increase price's probability of trading in the direction hinted by the deciphered formations. So, did most traders notice bullish signals this period, which should have helped price reverse its trend? Definitely. An obvious trendline breach comes top on the list, and it's an early sign of a shift in market structure. There is also the formation of same lows, reaffirming that the current support level is strong enough to propel price. Despite these bullish signals, Bitcoin failed to trade above the trend line upon its retest. The world's largest crypto also defied the bullish head and shoulders formation on intraday levels, which reveals there's still a great selling interest in the market. Let's dig a little deeper. A textbook description of breakout states the longer a trend line holds, the more significant it becomes. Also, the line's breach is one of the first signs of a trend change. Pairing these descriptions with a recent price action, you could have confidently said BTC's trend is changing. That's until things took a turn for the worse. There was even more than a breakout to back these statements. For instance, Bitcoin's monthly chart has clear bullish signals for the first time since November 2021. We have a green candle that, when paired with January's candle, it completes a piercing pattern formation. A piercing pattern indicates further decline may be unlikely, hence there could be a change in price direction. Coupled with that, the green candle's deep penetration into the red candle shows an offsetting of last month's candle's bearish momentum. This means irrespective of what's happening on the daily and weekly time frames, Bitcoin hasn't lost its upside momentum entirely. Be that as it may, Bitcoin's weekly chart isn't looking very rosy, even though it says we are still on track for higher prices. That's because we have a strong support around 35k, so it's a matter of waiting to see how price reacts to this support. The 40k and 39k support levels were disappointingly breached without effort, and the current weekly candle could possibly close within the channel. If that happens, there is a possibility that price may retrace to the channel's lows at 26k. The mere fact that we have less than 24 hours before the weekly candle closes gives us an idea on what to expect. What's more, a 2-week overview of the chart shows how the previous candles were fond of rejecting higher prices. Hence, for price to advance, the current pattern needs to change. The daily chart upon its analysis hints price still has a significant distance to cover before it reaches the SMA 200. Whether price will breach and close above the SMA if it eventually gets to the indicator is the question on most traders' mind. Note that where the SMA resides also confluences with our monthly resistance. Specifically, this resistance zone lies between 47K and 48K, which has been the case since January this year. So, will this be the third month in a row price has traded within this range, or can we expect a year's high around 50K? Don't give it too much thought, rather let things unfold 2 weeks from now and we will know which is more likely to happen. An interesting event during the course of the week was price's attempt to breach resistance at 45K. While that was a failed attempt, there were expectations that the next breakout wouldn't be a total fail since we had gotten a minor correction to 40.5K, allowing price to pick more buy orders at lower levels. This retrace ensured price could muster all the energy it needed to breach that resistance zone. While the retrace also helped to reset the overbought conditions on intraday charts, I realized it's not the buying pressure the market had to contend with but selling pressure. Considering that BTC's monthly chart is bullish and we are just in the second week of March, one cannot completely write off the market using 1 week's price action. For all we know, we could range from here, especially when support at 35K hasn't given way. The psychology behind it is that those who bought around 35K and even at 45K are still holding until their stop loss is hit. And there may be those like me who've learned a thing or two about false breakout and may opt for mental stop losses until we have a weekly candles close below our weekly support. Combine these two categories of traders and we can agree 35K might not give way as easily as 40K did. It proved to be strong once, twice, and who knows, there might be a third instance. It also follows that if that level is breached, all hell may break loose. That will be all for now until next week on another session on Gracia's memoir. I'm Grace Joseph and you are onto the Gracia memoir session.